Hello, everybody. Jim Malone here, coming to you live on Dallas Trading Floor. Well, it is Tuesday, and the market bounced, and it bounced well. So, very interesting. The question is it a start of a dead cat bounce, or is it going to be sustainable? I kind of tend to be on the former. I think it's gonna be a dead cat bounce, but, yesterday I did buy a small position. I was all cash last week, just all cash, and, I did buy a small position, yesterday in Dino, D-I-N-O, that's HF Sinclair. Interesting company. A lot of stuff going on there, I did increase my position. I only have a half position, and I'm still pretty much in cash here. But interesting the way it is. My current portfolio, basically, as you can see here, it's primarily cash and also just one stock, and that's Dino, D-I-N-O. And just kind of show you how that one did today. And let's click that over for the people that are watching on TikTok. Oh, there we go. All right. Yeah, and that one is looking fairly good. I mean, it was up nicely. So let's move it over there. There we go. Basically it finished out the day at 58.24. It was up about 4%, 4.6%, and that's on top of it going higher. So that's looking good. It's off a little bit in the after hours, about 14 cents. Not a whole lot, but definitely off a little bit in the after hours on the after hours action. Basically, this is the only one I have. 98 relative strength, and it's still in the buy zone. So this is. I don't know if I would buy it tomorrow just because, typically we were up 2 days, and I think we'll probably pull back. But this one does have a 100% checklist, just something to look at. Nothing, not a recommendation, but I definitely think the oil stocks are likely to do pretty well in this bounce. Now, I do believe this is a bounce and not the situation. So basically, we have an employment report coming out on Friday, and that employment report is going to be critical. I do think, though, it is going to be fairly favorable based on the limited expectations. We've had expectations that have moved down, so I definitely think this one is possibly good. We probably will have a gain of jobs, hopefully in the private sector, about 280,000. That's hopefully, and that hopefully will extend this rally probably into next week. But I wouldn't expect anything you're buying now, and if it's up, take your profits quickly because we're likely to see it go. We're likely to see things pull back after, I think, about 10 days or so. So I'm looking at about 2 weeks in this rally, and then probably I'll be selling into the strength, and then we'll see what it goes. We'll see what happens from there. One thing I did kind of want to bring up to you, this is kind of interesting here, is that we have a situation where, normally in a CanSlim investment, I only analyze stocks that basically, I think are going to be successful in the CanSlim way of doing things. But we've been pulled back so hard that there are some value stocks out there that we might want to take a look at. And these are some of, and there's some really big names in here like GM and Intel, which I think that normally I would not buy these stocks at this level, but it's getting to the point where there's been so much damage in the market, and that we could possibly get to one of these levels. So I kind of want to go through these stocks just really quick before we get into the questions. Now, again, these are not recommendations, but this is the kind of thing where I think that we could do very, very well. And what I'm going to do is I'm going to show you the weekly charts on these and just kind of go through each one individually. But the first one up is Dish Networks. You probably heard of this one. I definitely have. I definitely have. This first one is the Dish Networks. It has just been clobbered. I mean, basically, it was a high back here. Basically in last year. It was up here at about $40 a share. It's about $15 a share. The question is, how low can this go? Well, I think it definitely can go lower because obviously we've had some pretty bad results in terms of, in terms of things. But this one may prove to be, may prove to be a, long-term winner. Now, I'm not buying this one, but I wanted to show you this one just because it is so beaten down that, we might see something here. We've got 99% of the people invested in this are funds. So, um, and this has a PE ratio, a price to earnings ratio of 5. So they have good cash flow. It's sort of a declining business, but it is so cheap at $15.41. If we go out here to the monthly chart, we are basically down to where it was way back here almost in 2008. So as you can see, we're almost down to the level where, where this thing was in 2008, and it's got very, very strong cash flow. Now, I'm not saying I would buy this one, but I think this is really, really interesting. By the way, if you're interested, I do have a listing of these stocks that you can definitely take a look at. And here it is. If you go to not only if you go to the comments, but if you go just on this one, that's the industry strength list. Excuse me. This is the list of top stocks that that analysts like. And if you go to the comment section, you'll get this list. So just go to the comment section and then come on down there. Also, if you're watching on TikTok here, very easy to do this. Just go over to my just go to the link beacons. Click on that. Click on the YouTube feed, and then if you go into the comments, you'll be able to see kind of what I'm talking about. Okay. Well, interestingly enough, this is Dish Network, and it's looking pretty good. Another one I want to kind of show you here is Intel. Now, even though Intel has just been doing horribly, I do think that Intel is going to turn. I really believe it is because there's just a lot of reasons. I think that this is kind of one of the even though the stock has not performed well in the last few years, Intel is one of those stocks that I do think can turn around, and I do think probably will turn around eventually. Now, this is down tremendously this year. This is down. I mean, in 2022, let's kind of take a look and see how far down Intel is. The semiconductor area has just gotten whacked, but I do think that it's bottoming out, and I do think that it is starting to become viable here. You just look at this thing; it's all the way down. Now, I think I don't know if it's making a bottom or not. You can't say on that, but I do think that we are getting to a place where even if it's continuing to move lower, I do think that for the value investor, this might th- for the value investor, this might work very, very well. And let's see if I can show you the chart on this one, the comparison chart, because I think it's really interesting. And here we go. This year basically. This has been Intel this year. It's just gone down from about $100 to now where it's sitting, basically, at $27. So it's down 75%. This stock is down 75%. Now, I'm not buying it yet, but I'm going to start probably nibbling on this one because I do think that, it doesn't have that much more to go down. This is a strong company. I mean, Intel, even in a downturn, is likely to perform well because it has attributes that, I think we can show this for everybody on TikTok here. Um, Basically, the sales were down 22% this year. The profits are down 79%. But here's the thing about Intel. Intel currently has a PE ratio of 7. So you rarely ever get an opportunity to buy a stock like this, that is, I think, potentially, it's been in the future. And I think in the future, this one is is going to continue to be a growth stock. Now, here's the thing about this one. You're not going to make normally I would not buy it this way. I just wouldn't because this is not a CanSlim way of buying a stock. But um, with a stock like with a stock like Intel, that has these kind of numbers, I think that, there's something to be said for it. Now, if we go over to the checklist, this is a terrible checklist. It's got 33%, which is awful, but I think it may be coming to its bottom here. I really do because we had this move up. We have a relative strength of 13. This is if there was a beaten down stock out there, this is it. It's in the semiconductor area, and of course, it is a leader. Even after all these years, this company is a leader. So this is something to check out. But if you want to get more information on this, just go to this link that I put on the comments, and easy to do. All right. Well, thanks for bearing with me there, and let's get to some of your questions and on the stock. So thanks so much. All right, here we go. Let's see. Let's take a look at BP. Um, let's take a look at BP. Now, BP, British Petroleum, is I think one of the best integrated plays right now. Now, I currently am not in this stock, but if you want a large integrated company, I think this one is a excellent choice. We've had very, very nice movement on it. This is the only area of the market that I really, really like right now. Most of the areas of the market I just think are terrible, and I think you're better off in cash. But there's some areas of the market like this where I think that you can possibly buy some stocks that are good, and this area, the oil and gas area, is the place to be looking. Now, here's the thing with Intel. I mean, with BP, the sales were up 85%. That's largely due to the price of oil, but that's significant. The profits up 214% on this. So this is looking very, very strong. Now, now here's the issue that I have with BP. Currently, very little funds own this one, only about 2%. So it's not as good, but this has a price to earnings ratio, BP, of 4. Now, be very, very careful when it comes to price to earnings ratio because a lot of times when you have a low price to earnings ratio like this, people will say, well, the market's in decline. And I agree with them. But if you look at the cash flow on this particular unit, the return on equity on this is 17%, which is significant. And I do think it's going to be very, very good going forward. So this has an excellent checklist, 8 out of 9. So I definitely think this is a buy. I definitely think this one is a buy. Now let's look to see on the daily chart if there's an entry point here. Now remember, when we're buying like this, we're buying on a deep discount. So this is a very tough place to buy, but it is totally doable in terms of we have to kind of suspend some of our can slim rules here because this is a different kind of way to buy. Now, what I like about this one is that it moved right above the 50-day moving average and it's pulled up. So we're definitely seeing a bounce here. We're definitely seeing a bounce here. It's 31.23 a share, and the earnings are basically in about 28 days. So is this gonna happen quickly? Well, probably this is if you're gonna buy this one, it's a longer hold, but here's what I would do if I were buying this one, and I'm not buying this one, but here's what I would do. I would potentially look at this one. They're gonna have very good profits on this one, and I look to holding it over a long period of time. So definitely looks very, very good, Farouk. It definitely looks very, very good, and I think it's definitely viable. So one thing I want to point out. All right, this is a question from Lisa. Hello, Jim. Is it a good time to get back in the market? Take a look at Wolf, please. Okay, this is Wolf Speed, and also an excellent company. They are basically, of course, a semiconductor manufacturer that is going to be building one of the largest fabs. This is fabs is going to be built in New York State. So they just, I'm sorry, in North Carolina. So this is a very interesting company. Wolfspeed it used to be called Cree. Interesting in this sector. So let's take a look at Wolfspeed here. WOLF. Now, here's the thing about getting back into the market, Lisa. We still have to be very, very careful. I think this is going to be a dead cat bounce, and it's only going to last for I think, about 2 weeks or so. So we have to protect ourselves. We're really not at the place where we can really get back in totally, but I definitely like Wolfspeed a lot. I think it's a good company. It was up today significantly, almost, a little bit over 8%, coming off of the coming off of the 50-day moving average. So, very good stock. And let's take a look at the setup. 78%, and on the pattern recognition, we're looking at basically we're almost at the pivot. Now, here's what's happening. Obviously, in the market is we're seeing, because there's been such a drawdown, we're seeing some stocks, kind of at the bottom of the range. Now, here's the thing with Wolfspeed. I probably would not be a buyer of Wolfspeed here, just because I want to see it. I want to see it perform. I'm a little bit wary about buying it this close. I mean, I want to buy it basically on the 21-day line. Now we're a little bit extended above that, so I probably wouldn't buy it here. I'd probably wait for it to pull back to about 111. That's kind of where I think that it's likely to be. It's likely to be a better buy. It's about 111, but we had a nice reversal. I think we're going to get a pullback to about 111. That's where the 21-day line is. It's right about here, if you can see that. That's about where the 21-day line is, and that might be a place to enter the sub. But I like the stock. I think it's very, very good stock. All right. Sam is asking about the Spider. Of course, the Spider is the world's largest ETF, and it basically is it corresponds to the what's happening with the S&P 500. So it's a good proxy for the S&P 500. Now we had a very nice bounce today, and I want to kind of show you this here. I have basically we have a consolidation, and the bottom of the consolidation is 362, and then we got to bounce up from. Now here's what I believe is going to happen. And of course, whenever you make a prediction on the future, it's really difficult. But what I think is going to happen here is we're going to get a bounce, and we're going to move up to right about 400 or thereabouts. We're going to move right up to about here, and then we're going to get another leg down. Okay, but for right now, we're in what they call the dead cat bounce, and the dead cat bounce is, I still think that the trend on the spider and the entire market is still lower. Okay, so but within that context, we have these bounces. So it goes bounced up, bounce up, bounce up. You can see how it's kind of bouncing down, kind of like a slinky going down, going down the stairs. So that's kind of what's happening. So, but I do think that we have a little bit of a reprieve here. I do think we're going to see it coming from about here on up to about the 400 level. Over 400 on the spider, I would start closing my positions and taking profits, because I definitely think that that's going to be the situation. But I definitely think we're likely in the next about 2 weeks, I think, to get a little bit of a bounce on the market. So, that might be, that might work well for you. That so, yep, there we go. Yeah. All right. So let's take a yeah, there we go. So let's look at Tesla. Christine Rodriguez. Thank you very much. Let's look at Tesla TSLA. Now this is one I think you got to be careful. I wouldn't buy this one at this level. And even though it has bounced up today, why? Because I think that with Tesla, we still are probably going to go lower on Tesla. Just my humble opinion here, based on a lot of things. But we did have a nice bounce today. I don't think we're out of the woods with Tesla at all. We were up, we're up nicely. We're up 2%, 2.9% today, but now we're down after hours. So again, the trend on Tesla is this trend. If we go all the way back here, and that's just a downward trend. I mean, that's just a downward trend. We're in the dead cat bounce portion of that trend, but we're still moving lower. So here's the thing. I think the best thing right now, is just until we get a bottom on the price on Tesla, I think we have to avoid Tesla for now. And the reason I do is that, I think it's a great company. There's a lot going on with it. It's got a full order book, but I think that it's a little bit too richly priced. So let's kind of here's what I'm thinking. I mean, when you can buy an Intel for basically a 7 PE ratio. It just I don't think it makes sense to buy. Yeah, see, here we go. The PE ratio on this one is still 73, so very expensive stock right now relative to its peers. Now, of course, this is the premier EV maker in the world, but the problem is, I think going forward for profitability, Tesla is going to have to rely more on more on tax credits and that kind of thing. So here's the thing with Tesla going on right now. We have excellent numbers. The sales were up 42% last quarter over quarter, and the profits were up an incredible 58%. But still, it's very expensive stock because if you look at the PE ratio, it's a 73, and if we were to compare that to Intel, uh, you can see the difference. So let's compare them. I'm just going to do a comparison chart now. This is why I do think that for right now, anyways, uh, you know, we need to be careful with this. So if we compare Intel, um, now normally I wouldn't say to do this because normally in Can Slim we want to get stocks that are high and moving higher. But there's been so much market destruction that I think it's probably a good time to look at our strategy a little bit here and and see if we can find see if we can get some deep discount on very very good companies. Now I'm not willing to do this on anything but just what I consider blue chippers. Companies that are absolutely blue chip. I mean, that's the only ones that I'm willing to look at. Oops, yeah, there we go. So that's really the only ones I'm looking willing to look at here. Now, this is Intel and this is Tesla. Now, you notice the performance of Intel has been relatively horrible for the last year. I do believe that it's likely to turn. It's likely to turn. So if we were to look, let's say we were to go out and look at this over um, over a number of years. I'm going to go back to 2018. You'll notice that Intel still underperforms Tesla, but they're both over a long period of time. They're both moving down. I definitely think, though, we're going to get a bounce on Intel and not on Tesla. So basically, my whole thesis here is it's a good time. I don't think it's a good time to be in Tesla because I think that it has a long way to go, and that's going to be lower, unfortunately. So, but I really appreciate the the thing. Google is doing 100 million share buyback. I don't think this is. Here's the thing. I don't think that they. Here's when in this kind of market when you're seeing a buyback. Um, that means that they can't find anywhere better to put the stock. I mean, uh, they can't find anywhere better to, to they can't it's better for them to buy back their stock rather than to do, to invest it in their present business. So I don't like but in general, I'm not a fan of I'm not a fan of stock buybacks because that's saying that they don't have anywhere better to put the money in the near term future, and they're afraid of the stock moving lower. And I definitely am with Alphabet or Google because here's the thing: it really peaked out it peaked out on a share adjusted basis at about 145. It's now back down to a 100. So that's a loss basically of almost a third of the value, and that's really, that's really that's really since about March April timeframe. So I don't think this is necessarily a good thing. Usually, when companies buy back stock, that means that they are trying to keep the share price up, and I don't think that's a good thing going on here. So I am not a fan of this at all. And if we look at the PE ratio is fairly healthy on the PE ratio is fairly healthy on Google. It's 19, which isn't bad, but I think that there's better values out there right now. it's value time. I mean, there's been so much market destruction that we've kind of got to put on a different hat than we normally do and be more of a value investor. And right now, I just don't think I don't think it's a value personally. All right. Can you look into MU? And MU, for all that you don't know about this, this is a great company. This is Micron Technology, and MU just sold one of its fabs, so it is trying to raise it is trying to raise money. Now, again, this one has had this is why you can't totally depend on a low PE ratio. Um, you know, Micron has a PE ratio of 6, okay? So it means that, I'm sorry, PE ratio, yeah, PE ratio of 6. So even though they're a great company, I just think that, buying it, and this is one of the issues that I have buying Intel as well. I mean, great companies, and probably won't go out of business, but their sales did decline, did decline 29%. So what I'd like to do here is I'm gonna compare Intel with Micron. That's a good comparison because this is the Micron chart. There we go. Oops. See if I can get the Micron chart back up. There we go. This is the Micron chart and the Intel chart, and kind of take a look. Intel has underperformed. Boy, this is amazing when I look at this. Intel has underperformed Micron, which is absolutely incredible because typically, that is interesting. It's very interesting. It just shows you the weakness in this sector in the semiconductor sector. But basically, here it is. We have Intel, which has underperformed Micron over the standard period of time. So the question is um, would you go into Micron? Well, I would be a little bit careful because I don't know if it's bottoms. But one of the things is in this sector, Micron at $53 is not a bad deal. I don't think it's a strong stock. I mean, it's a strong company. It's just the market. I don't think is favoring them right now in the semis. So kind of a tough road to hoe. So I wouldn't be against it, but it wouldn't be my top pick in the semis. It just wouldn't be the top pick. All right, let's go to some um, questions from. Let's go to some questions from TikTok. Thank you for holding. Here we looked at Tesla. Uh, how's Qualcomm looking? Oh, that's interesting. Okay, let's look at Qualcomm. That's another interesting stock. Very much like this stock as well. So look at QCOM and see what's going on there. Um, this one is kind of a similar situation to Micron. This is a little bit stronger, of course, than a little bit stronger than Micron. Um, but it's a PE ratio. I mean, it's amazing to see these PE ratios like this so low for these tech stocks. Just shows you how much the tech market has been sold off. Um, it's Qualcomm is their sales were up very nicely. You had excellent profits. There's strong cash flow. The return on equity is 122%, which is incredible. So, this still hasn't bounced. This definitely could go lower. I mean, I could see this coming down, another, a little bit more. So if you're trying to buy this off the bottom, which I wouldn't recommend it, this one, I'd be a little bit careful. I think you got to watch this one go. I don't think it's, I think it's gonna reverse, but the question is when. So I'd be a little bit careful with Qualcomm here. I just would. I probably would not be a buyer of Qualcomm at this level. I think it's a little too expensive. Okay, we're at 20. Okay, so we're almost done. Unfortunately, let's try to get as many of these as I can. Sorry, Charles. I was a little bit. I had a doctor's appointment, so I was about 30 minutes late starting the show. So you're not missing. You didn't miss anything, which is great. All right. Um, Closed my written put on November XML. With this jump, should I get back in? I think I'd be careful. I think this is a dead cat bounce, and what Charles was asking about is a put on Exxon Mobil. I do think that we're going to see an upward trend in some of the, I think we're going to see an upward trend in some of the oil stocks. Exxon is a very, it's probably, it's the most conservative, but it's probably the best of the breed. I mean, it truly is. We here, and this is why always I trade on lines, as you can see. Um, you notice how it came right down to the right down to the line and then bounced, and that's exactly what's happened. So I definitely think this one's going higher. Uh, I think with Exxon, you're looking at a price of about 110 potentially. Now it's going to probably pull back, but eventually about 110 in about 3 weeks. Well, I don't think it's going to be that strong. I think it's going to a 100. So this is not really that. I think we're going to go, maybe 100, 105, and then we're going to reverse lower. So this is really just not, this is a tough pattern to trade. But I think that it's not a good time to be buying puts when we're in an upward trend. You want to see it pull back, and that's when you want to buy them. So I'd be a little bit careful here with Exxon. I think there's other better ones out there. So my opinion. Okay, Budenfisher. Um, okay, bottom fishing is tough. Okay, bottom fishing is one of the more difficult ways to go. But there's been so much damage in the market. Now, I don't think the other shoe has dropped in the market by a long shot. I do think we're going to see more damage in the market, and I want to kind of go over to this. I want to go to the spider to show you this. I think we're going down further in the market, but in these next 2 weeks, I think we're going to see a nice little bounce. But right now, if you look at the market, I think we could come all the way down to here. All right, I think we can come all the way down here, which is about 345 or so. And so I think that we're going to start to see some resistance as we did right here. Look at that! Isn't that amazing? Way back here in June of 2020, we had essentially a buy point. This is resistance. You can't see it came down there, and then it got support, and it's coming back up. But I still think the trend of the spider is down. So because of that, I think that if we could buy for a short period of time up to about 400. That's where I think we're going to turn lower. So I would be careful buying in this. Bottom fishing is tough. I want to see if the spider breaks lower than 345. That's when we want to start looking possibly for bargains. Now, it could go, as you see, it could go all the way down here, and the reason I'm bringing this up is this is the COVID low right here. Now, when this happened, I was shorting the spider. Okay, and I don't know if you see some of my older videos, but I was shorting the spider during this period. But when it hit 230, I closed all my shorts. And I don't think we're at that place yet, but I think the other shoe is gonna drop here, and I think we could go lower, much lower because of these interest rates. Remember, the Fed is not supporting this market. So I think we could, if we go lower than 320, I mean, 345 on the spider, we could go all the way back down here to about 230. So that's very, very low. So I think we've got to be super careful. So that's kind of it for today. Let's see. I know we have ET is live. um, yeah, you're right about this. Intel has bad leadership. Absolutely, I totally agree with you, Roman. This is about Intel. I agree with you. I totally agree that Intel has some real leadership problems. I really believe it does. I mean, look at this chart. It's horrible. It's absolutely it's this chart is absolutely horrible. But but this is kind of a wounded warrior. And here's why I think they're very likely to change their leadership and change the way they've been making a lot of large investments. Now, of course, that's not going to probably pay off for another several years. And I think that we're going to be in a recession, but the business that they're in, the chip manufacturing business, is still one of the best businesses out there. Now, the problem is, of course, they're trying everything they can to to pump up the stock, and they've acquired a company called Tower Semiconductor. I don't know how well that's going to go, but there still are a ton of funds that are in. Here we go. There's still a ton of funds that are in Intel, and we have about 36% of all the shares there are funds. Now, a lot of people have gotten out. All these funds have gotten out. The cash flow is still pretty darn good. Now, next year, and this is kind of really what we're looking at, they're looking for their profits to increase 16%. This year, they're down. They said their profits are going to fall 59%. So, this is kind of what I'm saying. This is kind of what I'm seeing here is that if you can buy this like at 20 or thereabouts, I think that based on the profit projections for next year, this thing is likely to move higher. Now it is in terms of its competition, it is not doing it is not doing well. But this company has size, and it doesn't have the greatest sponsorship rating, but it's a B. That's not bad. The timeliness bad. It's in a bad part of its cycle. That's true. Um, SMR is C. I mean, there's a lot of issues with Intel, but I think the size of the company um, but of course, you can say that true with GM. GM went out of business. I don't think Intel's going to go out of business, but I definitely think it has leadership problems. I totally agree. But I think that this may be a value stock. I'm not buying it yet, but I'm looking to buy it potentially long term. All right. Well, thank you, everybody, for watching today. I'm going to be, uh, you know, we need to basically uh, s- if you haven't liked the show, please do so. I always say that every time because it really helps us get out to people. But please like the show. Please hit that like button. Really appreciate it. And also, if you can hit the subscribe button if you're on the YouTube feed. Really appreciate that. It really helps us get out to a lot of people. But like and subscribe to the YouTube channel. Also like the feed on TikTok. So thank you very much for that as well. All right, I'll be back tomorrow at 5. Today I was starting a little bit late. Had a medical meeting, so I'll be back tomorrow at 5 o'clock. And everybody, happy trading.